Yo, what's going on, everyone? This is Jimmy from Just Hit Trading, and I got a watch list for this upcoming week. Today it's actually August 19th, Friday. We had a pre-read day today, but I wanted to make this watch list because I'll actually be on travel next week, so I won't really have too much time to make this on Sunday night. But there's no difference between right now seeing the setups and Sunday night. The only difference is that futures will open sunny night, so I'll post some updates on my Discord and my Instagram. You can find my Instagram and follow me in the description below. I'll leave a link down there for you guys. But just like last time, I want to start out with looking at the indexes. The two in particular would be ES, the S&P futures, as well as NQ, the Nasdaq futures, right? Because that gives us that broad market context for going into the next week. All right, so today, Friday, we had a pre-red day. You can see this daily candle. We rejected the daily 200 simple moving average earlier in the week, and that actually coincides pretty closely with the 0.707 fib level. Right here you can see it's fairly close, and the importance of this is that this is a golden pocket. It's usually a big part, big area of reversals, and so that's what we kind of expected to see where the 200 moving average would test it, and it did indeed reject it. So those are good plays this week. I had setups in the Discord, some pretty nice swings that all made some good money, and so we'll look to see what we can do this upcoming week. All right, so pre-red day, what I do see is that we had a basin candle yesterday on Thursday, right? So I do want to mark this area as an area of supply, right? So we have a daily, if I were to plot it real quick, daily supply area. So let me just mark this with the rectangle so I know the zone. All right. And because we broke through the daily 9, and this fib level of the 0.618, there is a chance that we could retest it. You can even see this wick right here on August 11th, right? We tested it and it rejected, but then we pushed higher and it did indeed hit the 200 simple moving average, but now we're back below the daily 9 EMA, right? So a lot of my setups really look into daily levels. I want to be sure where my daily EMAs are, my daily 9, 21, so on and so forth, right? That's what all these um, curves on the screen are. So now that we broke below the daily 9, my next area of interest really is this area. There's a consolidation area that can be treated as a demand zone. And actually, you know what? Let me just check to see on the weekly if that actually was a demand zone. No, it wasn't because it's a green candle. And so it's not uh, a clean demand zone, but it is something that I will look at when it gets into this area, which coincides with the 50% Fibonacci retracement. So really, what I'm going to look for is if we break the low, I will be looking for puts, right? Puts with my first profit target of this area of 4180, and this is the 200 weighted moving average. But before that, we had the psychological level of 4200, so that would be a first profit target and test. And for all we know, on Sunday night into Monday morning, the futures probably could even gap down and retest these levels, or it can even go up to retest the daily 9 before coming back down. Either way, we are breaking out of this, almost breaking out this upward trend, right? So if I just draw this trend line right here, right, we are starting to break out of this uptrend because we always closed above and used the daily 9 as support, and here we are, we broke down and closed below it. So there's uh, a lot of resistance, a lot of confluence as to breaking down from this uptrend, and we can see some new lows being made. So we'll keep an eye on that. That's ES, and so I'm bearish going into next week, but we can't be biased. We'll see what the stocks and equities, how they play out. I just want to note that we have this really big area of supply here at 42.79, and for right now, it looks like we are headed down. All right, next one we're going to look at is NQ. NQ, obviously same thing. We have the uh, uptrend that we saw since, what was it, the end of June, right? We had this really nice uptrend, and we are starting to break it. We are actually at the daily 200 weighted moving average. We didn't break it quite yet, but it's another area where we had a daily demand here formed from the beginning of August, and that got invalidated today, right? So now that it's been invalidated, I'm going to get rid of this one, remove this level, and now we have a daily supply as well. It's very similar to what we just plotted on the chart for ES, right? So I'm going to do the same thing. I'm going to make this a daily supply zone. You guys might not be able to see the actual pop-ups because I'm just recording my main screen. So that's probably why you might see these lines that I'm marking and my mouse moving all over without actually seeing the pop-up. So got this. Right, we had the weekly 50 weighted moving average, so let me just double check to see where that's at now. Right, it's still on track. It hasn't moved too much, but I'll update it on Monday. Right, so same thing with NQ as ES. We're looking a bit bearish, but there is a possibility that we can use this 200 weighted moving average as support and actually bounce off of it over the weekend and Sunday night, right? But if we don't and we break it, that will be our entry for puts down below. Our next demand zone really isn't until 13,089, where we have a 2-hour demand zone right here. So if I go to the 2-hour, let me just show you where I got that real quick. Right, we have a rally, base rally. So we have this basing candle right here, which is proving to be a good demand zone that's very fresh and hasn't been tested yet. So we'll see if it falls down to that level. We can see that there's, a bit of a level here where it's been respecting. There's this high, right? Um, that was the top of a bit of a bear flag, and it came down. And even when we went past it, we retested it as support, and here we are again at the same level. So I would want to keep this level in mind just to keep track of it. So really, if we break below 13,233, we're going to see more downside to the next big level, which is the 13,100 essentially. Right, so I'm gonna mark this as a key level for me because it's been respected pretty well in the past month, right? And you can see even it extends even before that too, all the way to even earlier beginning of August. So that's definitely a key level. All right, so instead of going through every single ticker on my watch list like last time, I actually handpicked a number of stocks that I think have pretty decent setups going into next week. So I want to go over some of those tickers with you guys. All right, so the first one is Amazon. Right, so let me switch back to the daily. Right, we have this the Fibonacci from the highs of March all the way down to lows back in May, right? So here, we've been on this low rally. We had earnings that gapped up, and now we are actually in the golden pocket area again, right? This whole area between the 0.618 fib level all the way to 0.707. These three levels I really look at for rejections, right? So these are the whole areas really the golden pocket. If you I'll do a video one day on the Fibonacci and how I use golden pocket and fib levels, but for now, this is always an area of rejection and reversal when we get into these areas, right? So in these past week or so, right, we've been forming these higher lows, but it's been very low volume, and we can see with these wicks on either side, there's been quite a bit of indecision. And even on one day, on August 8th, we actually had a gap up, right? But we still had these red candles. There wasn't enough follow through to really push it past these 144 levels. So we did make this ascending triangle, and usually it's somewhat of a bullish trend. But today we did break it. We broke the daily 9, and we actually did a full gap fill. And you can see, right here, I'll zoom in a little bit closer, that we did do a full gap fill. Right, so now that we had a full gap fill, we broke this trend, right? I would look to see where my next daily EMA is, and what I have is the daily 21 EMA right here, right about at $135 a share for Amazon. And so what the setup would be is if we break down from that low of day from today, Friday, we can see the first profit target of that 136, which is the fib level, and then that should coincide with that daily 21. So we're going to look for a retest, and then that would be our near-term profit target. But if the trend keeps continuing, right, it would be crazy, but there's a potential for this giant earnings gap fill, right? So we'll see what happens, but for now, let me write down Amazon break of low of the day Friday for puts targeting the daily 21. So if I just grab that level real quick, we have a low of day of 137.91, and the daily 21 is at approximately 135.63 for now, right? And I always like to explain the setup and not just, write what the entry and exits are. And so I will take the screenshot and post it. What I do have now is that there's also a break of the ascending triangle, and TTM is going down, right? So what I mean about TTM is the TTM squeeze down here. This is a momentum indicator. When you see these light blue bars, that means that there's very high momentum to upside. I mean, it could mean to downside because you see this gap down. But this gap down is why I actually turned dark blue. So the dark blue, royal blue, that's actually showing a decrease in momentum, and you can even see the bars decreasing, right? So that's a decrease in momentum, and it's going down to the downside. So let me just open up my Discord real quick so I can post this watch list. This is going to be for the 22nd. So let me just copy this, and then I will take this quick screenshot. I'm actually in swings already, just for transparency, that I entered in today, because I am betting that it's going to go down. All right, so that's Amazon. Next one we have is Apple, AAPL. All right, very similar, but not so much. But I mean, there's weakness in tech overall, and I do have swings for Apple puts as well. We actually have this trend line. If you see, it goes all the way back to the all-time highs, right? And it's been respecting it and rejecting. And you can even see that this week it tried to break that trend line with this giant wick to the upside. And when you see a large wick on the top of the candle, These wick means that there's a lot of selling pressure. So when it got to this area of 176, sellers stepped in and brought the price back down, right? And you can see the following day it had some incision as well, and it brought down even further with the gap down today on Friday. So we are approaching that daily 9, and we're not there yet, but that is an area of support, right? But what I can say, a couple of things is just look at this massive move that we've had, right? We had move from 129 all the way to near all-time highs at 175 in 2 months. And to be honest, I actually did buy shares and I completely exited out of my Apple position near these highs because of this trend line and the rejection on ES on that 200 daily simple moving average, right? So, I think uh, this ticker Apple, it really needs a pullback. So you want to be safe. Um, you can wait to the break of 168.79 to take puts, and the only reason why I say that is that you can see that there's this demand zone right here. And yeah, it's not a really strong demand zone because the rally, the basing candle is almost just as large as the both rally candles, right? So I don't really trust this demand, but there is some demand there. So I'm just going to label it anyway that there's daily demand and put a question mark because I'm not really sure. But you know, the safe entry would really be a break of 168.79. So I'm going to write that. Um, Rejected large trend line and is due for a pullback. You can even see down here, let me just show you guys real quick. This is the RSI. Look how overbought it is at these levels, 75. I think I mentioned this last week too. And now we are seeing that the dip down, right? So the momentum is going back down to the downside. We do need to be in more stable territories in terms of the RSI. So I think it's definitely due for pullback with that massive rally. So this rejected large trend line is due for a pullback. RSI is way overbought. Break of the daily 9, or to be safe, break of the 0.786 fib level for puts. And that 0.786 fib level is at about 168.79. Right, so that's Apple. Let me put that down. And on a large screen, um, large viewpoint, right, to see this whole full picture. I'll take a screenshot of that. Apple. All right. Next one I have is Boeing, BA. And we actually played puts on this ticker as well this week. Um, we have this gap fill to the bottom that I was anticipating. We actually closed below the daily 200 and the daily 21, right? So we're in this gap fill area. So I do see further move down to the daily 50. And we are in that whole supply area that formed that's a little bit above the golden pocket 707 to 786. So it did get a little bit more extended than I thought it would, but when it did get into 786 fib level with all these sellers hooks, that's when I was a little bit more bearish, right? And that's with context of the overall market with ES and NQ. So same thing here, right? And you can even see my put level from this week, that the break of 166.09. So let me get rid of this one. We don't need this price level right here. Don't need this one really, as well as this one. All right, so a little bit of a cleaner chart. But we do have this daily supply to form, just like NQ and And ES, so let me plot that daily. So again, we're above that. I mean, we're below the daily 21 and the daily 200 WMA, right? So I do see some further downside. So if we break low of day or even this wick over here, it's probably a safer entry for puts. We can see a further move down for a gap fill, right? So in a gap fill area, break of was it 162.33 for puts, targeting 160.5. Then the daily 50 weighted moving average, which is at about, let's just say 158 by the time it gets down there. It will probably be a little bit higher. Same thing, TTM is on the downtrend. RSI is also overbought, but it's at more reasonable conditions compared to, say, Apple, right, 50. But we broke these crucial daily moving averages, so we might be able to see some further room to the downside. But if you look at just candle structure, right here, um, it's a bit of consolidation. It's kind of like a basin zone with some chop before it broke out. So now we are kind of retesting this upper boundary, right? So that's why we need to see some sort of confirmation with a break of 162 before seeing more room to the downside, or else, this area is an area of some demand because of this basing area, right? So if this holds, you can probably say you can probably scalp it back up to the daily 9, but for big picture, I don't want to look at it with low reward, right? Your risk reward is kind of skewed more in terms of the risk factor. I think the downside you have more room to go instead of to the upside, right? So that's BA. All right, paste that in the Discord. All right, kind of a random ticker in a way. I don't really chart this too much because it's doesn't move too much, but there's been a good amount of volume lately, especially because of earnings. And if I look at it big picture, when we look at the all-time high back in um, September, right, it was at a high of 187.58, and here we are. And just look at how beautiful these fib levels line up, right? They go, uh, it's almost to the cent how well they respect it, and you can see how it bounces up and down between the levels. So what I want to see, this can keep moving further up. It can really go either way, but we are at some pretty overbought conditions that if we do break this daily 9 and the 200, we could look for a gap fill before it bounces, right? So again, because I am a bit more on the bearish side because of the indexes, that's why I would lean more towards waiting for a break of these daily EMAs for a gap fill before moving on further. So you can also see that it almost tested this 0.382 fib level before rejecting, but this kind of coincides with the day that the whole market rejected the 200 simple moving average, right? So that's why I really like the fibs and these daily EMAs and WMAs and whatnot. So Disney, we have a gap fill to the bottom from earnings, but we are above the daily 9 and 200. Break of the daily 200 is the safest entry for puts. with a target, and let me just write it down. This is at 117.73. And you also have to remember that sometimes these, the top and bottom of these gap fills, right? They can be used as support, right? So you, when we enter in or get close to the gap fill area, that's going to be used as support until we actually break. So really, we probably want a better entry of 117.3 instead of 73 with a target of the daily 21 and 0.236 fib level at about 113.18. Right? Is that clear? We have this gap fill. Market's looking a bit bearish. We need some pullback. Our RSI is very overbought, so we have some room down. So let me put that down in the Discord. Disney. Let's just take a look real quick at what the contracts look like for next week. Right? If we're looking at puts, let's look at the spread and bid and ask. It's not too bad. Right here, $8 spread, $3 spread, $5 spread. That's not too bad. And if we look at the volume and open interest, it's fairly large. So I think it's pretty liquid, obviously, and that's what I look for when I pick my stocks to put on my watch list. I want somewhat of a tight spread, like $5 is on the higher end of my range because I'm so used to SPY where it's only $1. So you want things that are liquid so that you can be able to easily get in and out of positions. All right. Next one, Microsoft. You can see a pattern here, right? Like a lot of these tickers are all there's all a gap fill that's needed. So this one's actually in the gap fill area already, and just look right here. Look how clean that is. The golden pocket 707 rejection, right? So rejection, and it also coincides with daily 200 simple moving average. And look at all these wicks and rejection and move down. So this is I'm actually already in puts on for swings on this one. So have it for expiry for next week, but I think it can complete the gap fill and hit the daily 21. So this one's a very clean setup. Rejected the golden pocket 0.707 fib, which also coincided with the daily 200 simple moving average, and has a gap fill to the bottom that it's already in. So if I take a look at this level, we have a put level entry of break and hold of 285.56 for puts, targeting the bottom of the gap, which is 283, then the daily 21 at about 281.60. Right, so this is a pretty clean setup. Again, I'm already in the day trade swings for this one, but we'll look to see if we can get some day trades on that as well. All right, just three more tickers. We got Neo, we are forming a bear flag that we actually broke out of. So I know that there's some, a lot of things going on, especially with the Chinese energy and Chinese EV, and they're kind of suffering right now. So, there's some bit of some catalyst for next week. right? We do have earnings on the 25th. 25th is on Thursday, so that's something to watch out for. But we already started breaking out this bear flag in this channel, right? So if we stay below this last higher low, which is at 19, we can see some further downside. And here's the next another level, right? So 19, 18.59, 18.13 would be the next few targets, right? So this one's fairly straightforward. It's more, doesn't have that much room to run, but with the news catalyst, I think it has a good chance to the downside. So Neo broke out of the bear flag, break and hold of 19.01 for puts, targeting 18.59, then 18.05. And that's 18.05 because that's a fib level, which it's in the same ballpark as this lower high of that I wrote as 1813, but so we do have some room down. And there's not much demand really, not until 17.28. So we'll see how that one goes. It's not one of my top plays, but it is something to keep watch on. So let me copy this one, Neo. All right, next one we have is PayPal. All right, so guess where we're at? We are at this. Oh, let me extend the zone real quick. We rejected that golden pocket area. You can see the 0.618 fib level. All right, didn't touch it exactly, but came pretty close. Then we created a basin candle on top of the daily 9, and then today we came below. There is a gap fill, just like all the other ones. So let me mark that. Yeah, we have the gap fill to the bottom, and also coincides with daily 21, right here. So we have two possibilities and two entries, in my opinion. So this is our put level, which is the low of the day. So two things is one, we can retest this 50% fib level at 97, which will, by that time on Monday, it will probably catch up, or at least the daily 9 will catch up the 50% fib level. So 97.5 would be an area where I would look for a rejection. And then if that broke, I would probably even look at up to like 98.73. And then the second option is just a clean break of 95.9 to the downside. So we rejected the golden pocket at the 0.618 fib level, like I was saying earlier. Broke down below the daily 9, and there's a gap fill to the bottom. Either enter puts at the daily 9 at about 97.5, or a break and hold of 95.9, targeting the daily 21 at about 94. All right, and let me just see one thing. See this trend. Let me just see if it broke the trend line yet. Nope. Look at this confluence. The daily 21, this trend line, this gap fill area. That's a really good profit target. I would even say that's a good area for calls if you want a good risk reward ratio, right? But I am looking to play it to the downside just to the gap fill area. So it's not a huge move, so it's not, not as high of a quality play compared to say like Apple that I showed or Microsoft's, but it's a decent play for a day trade. All right, one last ticker we got is Qualcomm. Qualcomm, it's kind of sad because we made a lot of money on these calls, right, because of this bull flag, and it was doing pretty well. Um, but it's still in this range of this channel, this bull flag. So we are squeezing pretty hard. You can see by these small red dots. Um, that means we are indeed in squeeze. We are holding this daily 200 and the daily 21. It looks like, but I can expect to see either a this 0.382 fib level to be used as support, and it could bounce because now we have a little mini bull flag inside this large bull flag, or we break down below this level, we can see further room to the downside down to the daily 50 weighted moving average. So this one's fairly straightforward. It's just play on the fib level, especially since we rejected and we create supply on the way down. Um, and we're currently rejecting this trend line, right? So what I have for Qualcomm is it's still in this downtrend slash bull flag, but still above the daily 200 weighted moving average. So break of the daily 200 for puts, targeting the daily 50. And this break of the daily 200 or the 0.382 fib level at 147.01 for puts. And daily 50 is at about 144. All right, let me just take a screenshot of this one, Qualcomm. And there you go. We have 1, 2, 3, 4, 5, 6, 7, 8 tickers for this upcoming week. They're all on the bearish side because that's what the market's currently looking like. Any of these put entry levels could, also be